Americans for Fair Taxation presents the Weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, November 12th, 2021. Crony Capitalism, Plaintiff's Lawyers, and the Income Tax. The Merriam-Webster Dictionary defines crony capitalism as an economic system in which individuals and businesses with political connections and influence are favored with things like tax breaks, grants, and other forms of government assistance in ways seen as suppressing open competition in a free market. Now, only the most ignorant people would believe that when different groups spend billions of dollars on lobbyists, that they expect nothing in return. This crony capitalism has been alive and well for centuries. It even existed before the United States became a country. Now, people instinctively know that crony capitalism is wrong, and this includes the politicians who are granting the favors. This is why they do their best to hide what they're doing from the public. They hope that once their deals are enshrined in law, the public will just never see them. In the printed version of this Chairman's Report, published at FAIRtax.org, there's a chart published by Forbes that shows the most trusted and least trusted professions in America. The most trusted is nurses, with 84% of the people saying they have a very high or high level of trust in them, with only 2% having a low level of trust. Doctors, pharmacists, and high school teachers are the next three. Not surprisingly, members of Congress come in dead last, ranking the absolute worst, with just 8% of the people trusting them, 58% distrusting them. Now, lawyers are also near the bottom of the pile, not far above members of Congress and car salespeople. Now, most lawyers work in anonymity out of the public view, but there's one very visible group of lawyers, and that's the personal injury attorneys. Their ads are everywhere, on billboards, on city buses, and of course on television. They implore you to call them if you've been injured. They entice you to call them by saying you may be entitled to substantial compensation. They promise to do all the work, pay all the costs, and you receive a large amount of money. Well, here's the rest of the story. Going to court is expensive. There are filing fees, deposition fees, expert witness fees, and numerous other costs which must be paid if you're going to file a lawsuit. And then there's the lawyer's fee itself, which can be hundreds of dollars per billable hour. Now, many people just can't afford the high costs of going to court. Consequently, almost all personal injury attorneys enter into a contingency fee arrangement with their clients. A contingency fee arrangement provides that the lawyer will loan the client the money to cover the costs of the case. The lawyer will then spend his or her time preparing and handling the case while receiving no current payment for that time and effort. If the lawyer wins the case, or if there's a settlement, the lawyer will first recoup the loan for the costs out of the settlement amount. Then, instead of receiving a fee based on billable hours, the lawyer generally gets a percentage, between 20 and 50% of the remaining amount. Now, the reason that the contingency fee arrangement must be a loan is because just paying financial assistance to a client is against the ethics rules that govern the practice of law. Now, these laws do vary some from state to state, but failure to follow these guidelines can lead to a lawyer being disbarred, that is, losing his or her privilege to practice law. Now, this is how the contingency fee arrangement can work. Assume you're injured in a car accident. You and the insurance company can't agree on the amount of compensation you're due, so you go to court. The case is settled for $50,000, costs are $10,000. Now, first, the lawyer is paid back that $10,000 in costs, leaving $40,000. Now, if the lawyer's percentage is 40%, then he or she receives $16,000 for his or her services, and the client is left with just $24,000. A tidy sum to be sure, but still less than half of the original settlement. Now, if the lawyer loses the case and there is no settlement, then the lawyer loses the $10,000 loan and receives no compensation for the time and effort spent in preparing and handling the case. Now, under current IRS rules, business expenses have to be ordinary and necessary in order to be tax deductible. a loan is not deductible. If you loan somebody money for their business, then that loan is not currently deductible to you on your income tax. It can only be deducted later if it's not repaid at some future date. Since contingency fee arrangements provide that the costs advanced by a lawyer are a loan and will be repaid if there's a settlement, those costs are not deductible at the time the loan is made. Now, if there is no settlement and the loan doesn't get repaid, then the loan amount becomes deductible as a business expense. Now, as a side note, there's a way in the Ninth Circuit for personal injury lawyers to deduct their costs if they structure their contingency fee arrangements in a certain way, but that's an option not available to the rest of the country. The practical impact of current law is that a personal injury lawyer who advances these costs to a client will have to do so with after-tax dollars. For example, assume the lawyer loans $10,000 in costs and pays income tax at a 33% rate. The lawyer will have to earn $15,000, pay a third of that or $5,000 in income taxes in order to have the $10,000 to loan to the client. If the loan to the client was currently deductible, the lawyer would pay the $10,000 in cost, deduct that from his or her income, and save 1/3 of that $10,000 or $3,300 in income taxes. This means that the loan would effectively be made with $6,700 of the lawyer's money and $3,300 of the federal government's money, which would have been paid in income taxes. Now, which would you rather pay, $15,000 or $6,700? According to a November 7, 2021 editorial in the Wall Street Journal, one of the provisions of the House Democrats' 2,100-page budget bill is a provision that will only benefit attorneys who file suits on a contingency fee arrangement. It would allow lawyers to immediately deduct the costs of loans made to clients as the loans are made. Now, this deduction would cost the federal Treasury $2.5 billion over a decade, according to the Joint Committee on Taxation. By reducing trial lawyers' legal costs, it would effectively subsidize contingency fee cases, and lawyers would be more likely to file dubious lawsuits and drag out cases if they can immediately deduct their expenses. Now, this is a direct income transfer to plaintiffs' lawyers who will turn around and finance Democratic election campaigns. It's the definition of a corrupt political bargain. In conclusion, you might ask, why should the rest of us support wealthy personal injury attorneys by creating the legal fiction that a loan is deductible only for them, but not for any of the rest of us who make business loans? The problem is that as long as you have an income payroll tax system, this type of benefit can be quietly provided to the groups who pay the most for tax favors. Now, one personal injury lawyer is reputed to have contributed $3 million to political action committees and has been rewarded with this proposed law change. The FAIRtax would eliminate this opportunity to sneak provisions into the tax code that benefit favored groups with the right political connections. It's a simple retail sales tax collected on the retail purchase of new goods and services. There are no exemptions, no deductions, and no loopholes. Yes, with the FAIRtax, the personal injury attorney would not be using after-tax dollars to finance the loan to his clients, but neither would the rest of us. With the FAIRtax, people with the means to do so could no longer buy preferential tax treatment and thereby transfer their federal tax burden to the rest of us. Now, obviously, one of the main reasons the ruling class and their minions in D.C. oppose the FAIRtax is that this sort of graft will no longer be available to them. Now, the FAIRtax won't eliminate crony capitalism altogether. The ruling class and their special interest groups will seek other ways to buy and sell favors. But when the FAIRtax is the law of the land, they can't bury their dirty deals deep within an incomprehensible tax code where they're almost totally hidden from the public. As Theodore Roosevelt said, in any moment of decision, the best thing you can do is the right thing. The next best thing is the wrong thing, and the worst thing you can do is nothing. Since we still have elections, we still have the ability to elect federal representatives who will replace the complex income payroll tax system with the FAIRtax. We just need to keep pointing out the insanity of the complex income tax and the benefits of the FAIRtax to everyone. Our friends and neighbors who we need to vote with us for a sane system of taxation just need to be informed. So, what can each of us do? We can write letters and make calls to our elected representatives and attend Zoom town hall meetings demanding that if they really want to allow Americans to take back control, the first step is to eliminate the income payroll tax system and enact the FAIRtax. The great 18th century Irish statesman Edmund Burke made a statement that applies in many ways. Nobody made a greater mistake than he who did nothing because he could do only a little. Take back control. Help us pass the FAIRtax. The IRS will be gone and will pay our taxes when we make purchases. We, not the ruling class and their minions in D.C., will decide how much federal tax we pay. And we'll know how much tax we pay because it'll be shown to us on every retail receipt. If you have friends who don't know about the FAIRtax, send them to FAIRtax.org. Have them watch the whiteboards under how it works, and if they agree, ask them to please join us. Then, contact your members of Congress and the President and demand that Congress pass the FAIRtax, the only truly fair tax.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the FAIRtax and learn why the FAIRtax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at FAIRtax.org.